afternoon. This is Diana Dennis with Keller Williams Realty Central Coast, and I'm here chatting with Sam Cotton at the Mortgage House. And he has some information to share with us about the lending practice and what the general state of mortgage loans is right now. Thanks for coming, Sam.
Thanks for inviting me, Diana. Looking forward to getting some information out, not in any huge amount of detail, just some general guidelines. And if people have additional questions, they want a little more in depth, because no matter what we say today, things are in such a state of flux that I could give you advice today and a whole new series of guidelines would show up tomorrow. So it's always good to get current and fresh information.
Absolutely. Completely agree with you. And I think getting the information out to everyone at this point in time from a local resource versus listening to what's arriving on the television or what they're reading on the internet, it's nice to hear from that local expert. So I appreciate that. So what is it that you'd like to share with us today?
Well, I just want everyone to know we are doing loans. We had, as a matter of fact, our busiest month ever at the Mortgage House. We funded $88 million this month, and that sets a record for us. So we're very proud of that. We've been getting, even in the coronavirus environment, we're getting purchase money loans out in 30 days or less. Refinances, we're trying to get 45 days or less, but that seems to be a little more problematic because we're devoting so many resources to our purchase money loans. We have set up guidelines that if you are locked in for 45 days at the Mortgage House and your loan exceeds those 45-day lock, we will continue to honor our commitment to that lock for however long it takes.
Wow, so that's an unusual circumstance.
Yes, and it's caused us to hedge, and that's cost us money, but our clients and our integrity is very important to us at the Mortgage House. So we are doing purchase and refinances. The rates aren't quite as good right now as they were at the beginning of the month because there was this huge influx of mortgages because the rates were unbelievable. Things are starting to calm down again. Rates tend to be in the mid threes now, with some decline for certain loan to values, certain credit scores, certain types of loans.
All right. And what are the types of loans that you're going to see as being more common over the next couple of months?
Well, what I'm seeing is FHA and VA, our government loans, tend to have the best rates. Fannie and Freddie refinance loans, especially higher loan to value or non-owner occupied or cash out loans, the premium on those loans isn't quite as attractive. And by premium, I mean the pricing. So whereas a FHA or VA loan may be in the very low threes for a 30, to do a cash out refi, you may be closer to 4, depending on loan to value, credit score, debt to income, all those things. This is current.
Well, those are still really good rates.
But that's changing daily. The bond market is very attractive right now. So depending on the situation, it may be quite a bit less than what I just mentioned.
Sure. So we just have to take a look at it day to day. And how soon through the application process can they actually lock in that rate?
The day I get them to sign the e-consent, I can lock their loan.
Okay, wonderful.
However, there is a process that we use. It's called day one certainty. If I have all of their information, their finances, their credit report, all those, their income, if I have that up front, they may qualify for what they call day one certainty. And once we get a day one certainty, it really reduces the amount of verifications that we have to do for the client's income. And if we get a day one certainty on any of our clients, we will extend that loan, that lock, as long as it takes, even if it takes 120 days. They are completely covered with our day one certainty.
That's great. So my understanding is if somebody wants to make a purchase on a home at this point in time, and they're already pre-qualified through the mortgage house, and they want to write an offer on a property that we have virtually walked them through, we should be writing that offer to close 45 days or sooner. So the expectation is at least 45 days. That's extended from the traditional 30 days. And what other changes can the home buyer expect through maybe the appraisal process, the verification of employment that's needed? Share
Well,
more about that.
the verification of employment is going to depend substantially on what line of work they're in. So if they're in a impacted line of work, such as a waitress, a massage therapist, somebody whose job is on furlough, that's going to be difficult then to qualify if that's their sole source of income. I'm doing a VA loan right now for a nice couple. Her income is on furlough, but he works for a municipality, and his debt to income, credit scores, and everything, and his current income qualify him a loan. So we're proceeding even though she's furloughed. So like I said, every case is a little different. If there's a question, they should probably reach out to their lender to see if they qualify for a purchase money loan. And like I said, if I can get everything up front, we can close purchase money loans in 30 days.
Okay, good. So we can still get it within a month's time frame.
Yes.
All right. So as far as the appraisal is concerned, typically an appraisal, along with all the other inspections that are done, they're going to the property, they're accessing the property, which has obviously changed during this COVID-19 situation that we're up against. So what is changing with the appraisal, the value of the home during that escrow process?
I haven't seen the value necessarily change, but what I have seen is they're Fannie and Freddie, the two major servicers, or the two major entities that sponsor mortgages in the United States, are granting a lot of appraisal waivers. And that's nice because we put down what we feel the property's worth. And if it's a decent loan to value and it's in a moderately homogeneous neighborhood, the other thing that they're doing is drive-by appraisals or desk appraisals, desk review appraisals. And those are assisting with the appraisers not having to visit the premises directly.
But they still do all the background information, research that's needed, which they obtain online anyhow. They're just really the only change is they're not entering the subject property.
And they're not verifying the internal condition of the property. But quite a few of our investors, and an investor is any source of funds, which could be a bank, a credit union, a mortgage bank. And we're a mortgage banker, but we get our money from a variety of sources, such banks, credit unions, mortgage entities. So that's an investor. And one of the things that's happening with the investors, to segue into a little different situation here, is they're really modifying their guidelines. What's happening is credit scores on some types of loans have been raised. Debt to income levels have been lowered on VA loans. It used to be you could get a VA loan if you had enough residual income over 50% debt to income. That's now been shut down to 50% with no manual underwriting. Before, if you had an exception, they would allow the VA underwriter to do a manual underwrite. That's not so much anymore. Also, manufactured home loans, they've withdrawn most of the support for those. A few of our investors have stopped doing non-conforming jumbos and construction loans. They're putting those on hold for right now.
Right, just temporarily. Good.
Yes.
All right. So when you are consulting with your buyers, your applicants that come in, how are you meeting with them? How are you getting them through this process?
Well, we do a lot of it. I'm working out of my house, as you can see. A lot of them, I get the information emailed to me. I do a thorough uh, evaluation with them over the phone. I get their information sent to my email and analyze it that way. I can do everything from my home situation here that I could do from my office. So
Okay,
I've got the ability to print out, run credit reports, interface with my processor, my junior processor, with our company, with escrow, with title. I can do that all from my laptop.
Yeah. So everybody's working just virtually.
Well, we actually have a couple folks in our San Luis office. So if somebody needs to drop something off or pick something up that we've copied, there are a couple folks there. Of course, they
Okay,
have to
wonderful.
undergo a thorough, cleaning
Yeah,
process.
spray them down.
No, that's not true. They just there's no decontamination procedure to drop something off at the mortgage house, but we do limit who comes in and who goes out.
Yeah, same as escrow. Escrow offices are still open. They are by appointment only, and everybody's taking, the best safety precautions that we have to offer. And
Absolutely.
it's good that is top of mind. We're not conducting any open houses. We're not showing properties. But if there's a buyer that is pre-qualified, they want to see a property, and the seller is actually there on site, they're doing the same thing. We're getting everybody all lined out on a Zoom call, and we're virtually having the seller walk the buyer through the property. So it's interesting to see how we've all adapted to horrible circumstances, but we're all doing what we can to continue the momentum to help everyone achieve what they are out to, what they've set their goals out for. So if somebody, oh, I'm sorry, go ahead.
One of the things I really miss is I try and go to all my signings for loan documents, and I have not been able to do that for the past 3 weeks. And it's tough. It's tough because I miss my clients. I like my clients. Yeah, it's tough. Now, you were going to say, I'm sorry.
Oh, no, that's okay. I'll just add to what you were just saying about the face-to-face meetings. It is very difficult not having that direct connection. I have a closing that's going to occur next week, and we have to set it up with the buyer where he has a one-day code to the lockbox to open up the lockbox to get his key out to his new home. And I thought, well, that doesn't prevent me from being across the street in my car, and I could, I don't know, pop open a bottle of champagne or something for him and do a little woohoo, congratulations. But yeah, it's definitely changed.
I think cold bottles of wine kill the coronavirus.
Let's hope so. Yeah, let's hope so. So if somebody wanted to get in touch with you to begin that application process, what number would they call?
805-550-5000. That was somebody there calling, wanting to start
Perfect.
the application.
Yeah, that was great timing. Or they could email. Yeah, go ahead again.
805-550-5000 or sam@themortgagehouse.com.
Okay, wonderful.
And
so
go ahead.
That's okay. Was there something else you wanted to add to that?
No. What I want to add is if you currently have a mortgage and you're having difficulty because of the coronavirus making your payments, there are options available to you. One of them is called Forbearance, and both Fannie, Freddie, FHA, and VA are allowing this in some cases, in a lot of cases. So what you need to do If you can make your current payment, make it. If you can't, reach out to your current servicer as soon as you can. As soon as you can. You can go to Google and type in mortgage forbearance, coronavirus, and then go to the frequently asked questions, Fannie Mae, Freddie Mac assistance options for families impacted by COVID-19. This is what it looks like. And you can download that. It gives you lots of phone numbers to call. I won't go into the details because it's available on your computer.
All right, great. And is there any additional advice if, let's say, for example, the servicer says, oh, sure, we're going to go ahead and allow you to, verbally they're telling them this, we're going to go ahead and allow you to wait an additional 30 days or put that on the back end of your loan. My advice to them would be to get that information in writing.
Okay, let me read a little bit here. It's available regardless of whether your property, second home, or investment property. It allows an alternative payment schedule to reduce or suspend payments for a period of time. Mortgage forbearance plans do not reduce principal amount owed on a mortgage. Interest continues to accrue. They do not incur late fees, other penalties. However, terms of the mortgage are unchanged, and arrangements will need to be made with the servicer to make up the missed payments. But that's between you and your servicer. And your servicer, no matter who you originated your loan with, your servicer is the person you write your check to. So you have to make the arrangements after forbearance is over, after you're back to work, to make up those missed payments. And that could take a variety of appearances.
All right, great. That's really good information. So, yeah, before we wrap up this afternoon, was there any other additional detail that you'd like to share?
We are doing mortgages, just like you're selling houses. It's a little different than what we did it 30 days ago, but they can be done. They are, in some cases, a little challenging. Because one of the reasons is when we do a mortgage loan, we have to get IRS tax transcripts. Even though you've given us your tax returns, we still have to check with the IRS and get copies from IRS of what you filed to make sure they match. There was some IRS tax return issues back a few years ago. So for the last 4 or 5 years, we get IRS transcripts. And people think, well, I just gave you my tax returns. That's fine, but we still have to verify that that's what you filed with the IRS. The IRS has shut down 2 of their big service centers. They're not providing tax transcripts. So what we're asking is our clients to go into the IRS, establish an account, and download their personal tax transcripts, which is very easy to do. It takes about 8 minutes, 9 minutes. The other thing is there are certain servicers and investors that have waived tax transcripts requirements. So what we're trying to do is when we lock one of our loans, is lock with one of these 5 investors at this point. So, but get prepared. If we have to go with a different investor because there's a way better rate for our client, you may be asked to supply your IRS 1040 transcript personally. And before, what happened is we had a supplier that would provide all these IRS tax transcripts. Well, they can't because the IRS is not sending them out. However, for the taxpayer themselves, that program's still available, and it's available very quickly. If you have any questions on that, just let me know. I can tell you exactly what to do and where to go.
Okay, great,
805
great. So I
805
just, I,
550 5000.
all right, we got it. So I just want to um, share, it's so important to work with a lender that is experienced, that understands the scope of the market right now, and that can answer all the questions. And even if the answer doesn't come immediately, to go to a resource such as Sam Cotton to know where to find these answers for you so that you can ultimately work through the process as smoothly as possible. And at the end of the day, get the keys to your new home. So, Sam, thank you so much for joining me this afternoon and sharing all these important details with everyone out there that's going to be accessing this information. I really appreciate it.
Thank you very much for inviting me.
All right, Sam. Have a good afternoon.
You too.
All
Bye-bye.
right, thanks. Bye.